Buenos días. Vamos a dar comienzo a esta jornada, a esta sesión de presentación del Gas Market Report, que es el primer cuarto del 2023 y toda la situación del año 2022. We are going to switch to English because this presentation is going to be in English, because our friend Jean-Baptiste Dubreuil, he's going to present in English this report. As you know, we did it. We presented in May and in October last year the evolution of the gas natural market because it was very interesting for all of us. We were following this the evolution of the natural gas market last year very closely. And the main issue in October was the uncertainty about what will happen with this market in the following months there. And now we are going to the spring, and we are going to see what happened. The presentation from Jean-Baptiste Dubreuil, as you know, is senior analyst of natural gas in the International Energy Agency. And this report, they put out this report with the highlights of the 2022, all the what happened in 2022, and it's a forecast. They have another chapter, the forecast for the 2023 market, as you know, what is going to happen, or try to understand the market in the near future. And the third part is very interesting too, because this is biomethane is all renewable gases situation right now. That thank you for coming to this presentation. Thank you, Jean-Baptiste. It's the third time in a year he's presenting us this very interesting report. I recommend you to download from the IEA the whole chapters of this report. After this, as always, you can send your question after this presentation with Jean-Baptiste. We are going to introduce a Q&A section for everybody who have been interested, and you can send your questions to our questions in the Zoom. Thank you very much for you, Jean-Baptiste. The floor is yours. Thank you.
Thank you so much. Good morning, good afternoon, everyone. Thanks a lot again to the Spanish Energy Club for hosting me again today. It's always a pleasure to be amongst you, although virtually. So today I would like to share with you some highlights from our latest quarterly gas market report that came out just a couple of weeks ago. That, as Arcadio mentioned, covers the span of what happened in 2022, which is, as you know, a very specific year for the whole energy industry and for natural gas in particular. Also some insights for what may happen this year in terms of global gas consumption and balance. So to begin with, as you all know, last year, with the invasion of Ukraine by Russia a bit more than a year and a month ago, this triggered a major crisis for the global gas system, which morphed into a global energy and commodity crisis. There's a few of the main indices that we track at the IEA when we closely monitor the evolution of the gas markets. You can see on your left the evolution of Russian pipeline gas flows to Europe. As you know, as one of the consequences of the invasion, Russia has decided to scale back its deliveries to Europe by pipeline. And since the beginning of the invasion, those pipeline flows have declined by almost 70%. They were halved last year, 2022, compared to 2021. And as we speak, Russia delivers about 20-25% what it used to deliver a year ago. This, of course, has had repercussions not only on European energy consumers, but on global energy consumers, as the gap left by Russian pipeline gas to Europe had to be filled by alternative sources. And most of that gap was filled by liquefied natural gas. And given that the LNG market supply did not increase to the point of meeting the additional needs from Europe, this has led to some major tensions on the global LNG trade. And you can see it on the right-hand side figure. This is the evolution, monthly evolution of spot LNG trade deliveries to Asia, the largest LNG buyer in the world. As you can see, there was a steep decline in LNG deliveries to Asia from the beginning of the invasion, especially to China. According to our estimates, Chinese spot LNG deliveries declined by about 60% last year on the account of this very tight situation, but also on domestic consumption issues. Last point, of course, the repercussion on prices. This is the middle chart. Prices have moved to all-time records since the start of the invasion, and prices in Europe, which is the light blue curve, and in Asia, which is the red blue curve, peaked to all-time records at the end of the summer last year, moved to close to $100 per million British thermal units, MMBTUs, end of August. Since then, we have seen a very steep decline in prices, both in Europe, Asia, but also in North America. As we speak now, prices in Europe for short-term delivery are below $15 per MMBTU, around $13 per MMBTU, the same for Asia, and US prices are around $2 per MMBTU. So we see prices coming down very, very quickly. This comes from a combination of policy-driven measures, especially in Europe with the run to fill up underground storages to prepare for the winter of 22-23, which has provided some buffer for domestic needs. Also, of course, we were blessed with unseasonably mild temperatures across the Northern Hemisphere in the past winter, not only in Europe, but also in Asia and in North America. So the situation has improved in terms of pricing, but of course, the direct consequences of the war in Ukraine in terms of availability of supply remain a very strong source of uncertainty and of volatility on the prices. In terms of global LNG balance, this is the incremental balance for 22 compared to 21. So what has changed in between 21 and 22? So if you look first at the right-hand side, the global LNG supply, the dark blue bar, you see that global LNG supply increased by less than 30 billion cubic meters last year. Half of it was coming from the United States, the other half coming from existing projects in Asia, in Latin America, Africa, and even in Europe with the restart of Norway's liquefaction capacity expansion. But if you compare it with the needs from Europe, which are above 60, close to 65 billion cubic meters, you see that this increase from the market was covering less than half of the additional needs from Europe that arose from this cut in Russian pipeline deliveries. So of course, to balance out the market, there has had to be some decline in LNG consumption in other markets, mainly in Asia, as you can see. And as I said in the previous, as you saw from the previous slide, China was the largest contributor into that decline. If we look now at the impact of this tight supply, high price environment onto gas consumption, well, first in Europe, Europe was the most heavily impacted region, and we have, according to our estimates, a 13% year-on-year decline in gas consumption last year in Europe. That's bigger than the impact of 2020 and the global lockdowns induced by COVID. As you can see, the decline started very heavily since Q1, but the largest point was in Q4. We had an exceptional situation in Q3 during the summer, where the decline was not as important as in other quarters. This comes from the very tight situation in the power market. If you remember, in Europe, we had very, very high temperatures, which resulted into droughts. There was not enough hydro capacity. Combined with the lower capacity of nuclear in France, this has led to strong tension in terms of thermal power generation and, of course, additional needs to be picked up by natural gas. Looking now at the situation in Asia, so the middle graph gives you a basket of major Asian consuming countries, and you see that for the first time ever, we have seen last year declining gas consumption for the whole year in the Asia Pacific region. Our estimate for the whole region was about 1% decline, 1.5% decline. And this comes again from negative growth in China, but also impacted consumption in almost all the Asian countries, whether they be mature markets such as Japan or Korea, or more price-sensitive markets such as India, Bangladesh, Pakistan, which have all suffered from the very high price environment. Last but not least, the situation in North America, completely different. We're talking here about the net exporting market, and we have seen very strong, robust growth in North America last year, which was driven by the United States and by Canada. And in both markets, there was a very strong demand increase in power generation from natural gas, coming from a switch away from coal in Canada, and also from lower availability of nuclear and hydro in the United States. But one of the key points was China. So last year in China, according to our estimates, gas consumption declined by about 1%, from a range of 0.6 to 1.6, depending on the different assessments. But this is the first time in 40 years when Chinese gas consumption saw an actual decline. If you look at the breakdown, this is on the right-hand side, you see that the bulk of the decline came from power generation, but we also had negative growth from residential and commercial customers, whereas industry was still positive. In the case of China, this decline does not only stem from the high price environment. This also is linked to the macroeconomic context of China, lower industrial performance and growth, and also, of course, the impact of the zero COVID policy, which has particularly impacted residential and commercial consumption. All in all, for 2022, our estimate is that global gas consumption declined by about 65 billion cubic meters, or about 1.6% decline compared to 2021. If you remember 2021, we had a very strong increase in global gas consumption after the impact of the lockdowns of 2020, with a very strong 4.5% growth in global gas consumption. If we look now at the situation last year in 2022, this 65 BCM decline globally is more or less comparable with what we've seen in 2020 with the lockdowns, or in 2009 with the impact of the financial crisis. But if you look a bit more into the details, you have the breakdown here on the left-hand side by region, on the right-hand side by source and sector. You see that in terms of region, the picture is quite different from what we saw in the impact of the COVID crisis in 2020, where all the regions got negatively impacted. Here in 2022, it mainly comes from Europe, of course. We still had a very strong growth from North America and still some positive growth from the Middle East, but they were more than offset by the declines in other regions, and particularly from Europe. For this year, 2023, our estimate is that we're going to see flat growth with some rebound in Asia, and continuing growth in the Middle East being offset by continuing decline in Europe and a return to negative growth in North America. This is, of course, highly uncertain. We have lots of risk factors to consider, but our best assumption for the timing is that we're not going to see any growth, globally speaking. Looking at the latest estimates in terms of demand for the month of February, we've had the continuation of this mild winter kicking in and impacting residential consumption. And you can see for Europe and the United States on the left-hand side, there's a major decline in residential and commercial consumption compared to February 2022, which comes mainly from this mild temperature environment. In Europe, we have seen an increase in power generation from gas compared to last year, but of course, this is not sufficient to offset the decline from the other sectors. Whereas in China, we're seeing some slight rebound, which is driven both by the residential and the industrial sector, while power generation is still negative. In terms of global trade for February 23 compared to last year, there has been an increase. On the demand side, this has been fueled in equal parts by Europe and by Asia Pacific. And in terms of supply, this comes from two main players, the United States on the one hand, and Asian exporters for February, mainly coming from Australia and Indonesia. So last year and continuing this year, one of the major sources of growth has been the US LNG export capacity. This is backed by strong growth in domestic gas production, in spite of very limited investment in new drillings. This is the breakdown per types of plays of shale and conventional. The two blue bars at the bottom are dry shale, so mainly coming from pure gas plays. The two green bars, the Permian and other associated, mainly driven by oil. And if you look at the numbers, you see that in 22 and starting in 21, the bulk of the growth in gas production in the US came from oil-driven plays, which are still driving investment, whereas gas-driven plays are not seeing that much investment. We have even seen a decline in the Appalachian Basin, which is the largest gas-driven basin in the US last year. But all in all, we see a continuing growth in US gas production, whereas consumption is expected to decline this year. There's still a good margin to increase export flows from the US up to the top of their capacity. As you know, last year, the US LNG export capacity was hampered by a fire in the Freeport LNG export terminal. This is currently being fixed, and the Freeport LNG terminal is resuming operations. And so we do expect to see a restart of those LNG flows and an expansion compared to last year. In terms of global LNG, last year we saw about 5.5% increase. Most of that, as I said, was driven by US exports and the restart of other facilities in other regions. For this year, we do expect to see a slightly lower increase, about 4%, 4.5%. The prospects for additional growth are quite limited in the next 3 years. If you look at the pipeline of projects for new LNG export facilities, it is rather limited until 25, 26, where we see major expansions coming from the United States with the Golden Pass project, from Canada. And of course, in 26, 27, there's a major expansion coming from Qatar, which will provide further LNG capacity to the market. But up until 25 is likely to remain a tight market on the LNG supply side. Last year, with the very high prices and large uncertainty and the availability of supply and security of supply, Many analysts would have thought about a major increase in terms of investment decisions for new LNG liquefaction capacity. It turned out that we didn't see that many. This chart illustrates the amount of new capacity being sanctioned by final investment decision from 2014 onto this year so far. As you can see, 2022 was not a major year in spite of the exceptional price conditions on the market. This comes mainly from the fact that there's huge uncertainty on the buyer side, especially European buyers who are increasing their import capacity with new terminals, either onshore or offshore terminals being built to replace the missing flows from Russia. But at the same time, those markets have very strong targets to reduce their exposure to fossil fuels and to natural gas in particular. So it's difficult for those buyers to commit on long-term projects, and as a result, difficult for sellers to commit on projects without the firm buying of takers for 20 plus years on regular projects. However, we've seen this month 2 projects being commissioned in the US, the second phase of Plaquemines LNG and the Port Arthur first phase. And if you combine the two, you see that we're already close to the total amount that was commissioned in terms of new investment last year. So there's still plenty of opportunities for new investments in the LNG cycle to unfold in the coming month if buyers and sellers can find some arrangements to provide flexible and long-term security on their markets. Looking at Europe now in terms of LNG commissioning capacity, of course, the decline in Russian gas pipeline flows to Europe has led to a race into securing new forms of LNG and of gas supply in the form of LNG, which has led to a rush to get new capacity, regasification capacity. Most of it coming from floating regasification units. If you look at the figure since January last year, so a bit more than a year, there has been up to 30 billion cubic meters a year of regasification capacity that has been completed. And we have, as of end of March, another 40 plus BCM of capacity under construction in the EU, plus up to 60 BCM of projects still planned to bring further capacity to the European markets. In terms of trade in between those liquefactions and regasification capacity, what has been the impact in terms of shipping? Well, 2022 has been a very strong year in terms of orders for new LNG carriers. And as you can see, we were close to 180 new vessels being ordered last year, most of it coming from Korean shipyards, but also a very strong increase coming from Chinese shipyards. So the capacity, the average cycle for building an LNG carrier is about 3 years. So we expect to see those capacities coming to the market around 25, 26, online with the new liquefaction capacities coming from North America and the Middle East. One major uncertainty, I was referring to a very uncertain outlook for 2023 in terms of gas markets. One of the major uncertainties on the demand side is the shape of the rebound in Chinese gas consumption and what it means in terms of Chinese LNG imports. Last year, China LNG imports declined by 20%, overall imports. And the breadth and depth of the rebound in demand will have, of course, a very strong impact on China's appetite for LNG this year, and to which extent this will put further pressure or not on the global LNG market. Our base assumption so far is to see a Chinese gas demand growth of 6% this year, which would translate into 10% increase in LNG imports. So that coincides with that base case bar you see on the chart, which means that we will see some rebound compared to last year, but not as big as 2021. It will be more or less on par with 2020 LNG import numbers from China. There is, however, a substantial amount of uncertainty on that number, which comes both from the demand side, the evolution of domestic consumption, especially linked to the industrial performance of China on the one hand, and the evolution of domestic Chinese production of natural gas, which can play a substantial role in buffering the need for additional LNG. So if you put together those two uncertainty, the range of potential Chinese demand for LNG is about 40 billion cubic meters, in between the low case where we have more reduced rebound in gas consumption and higher deliverability of domestic gas production, and the upper case where we have a stronger rebound in gas consumption. In that latter case, the high case, we would see Chinese LNG consumption being above 2021, which is likely, of course, to put further strain on the global LNG system. Another strong uncertainty, of course, is related to Russian gas deliveries. As I mentioned earlier, we have seen a halving of the deliveries of Russian gas in 2022 compared to 2021. We still have about less than a third of what Russia was delivering before the beginning of the invasion of Ukraine. So there's still a risk that Russia further reduces its deliveries and even brings them down to zero. In that case, if we assume a stress case, this is not our central forecast, this is a specific stress case for policymakers, in which we assume a combination of a cold winter in Q4 and a situation where Russian flows were interrupted throughout 2023, as from the end of Q1. Also strong tension of LNG due to the rebound of Chinese consumption. We could end up in a situation where we would have a supply gap for Europe. And that gap will need to be matched by demand side responses. So for that purpose, the IEA has done an analysis, and this is being regularly updated and available on our website, on what are the policy measures and drivers to enhance the European Union and the Eastern European neighbors of the EU supply security and resilience in case of further cuts from Russia. The first one, of course, is to reduce natural gas in a structural manner through the development of the faster development of renewables and further efforts in terms of energy efficiency. The second one is to optimize the use of existing infrastructure in order to further create interconnections and facilitate exchanges among markets in Europe and avoid to have remaining bottlenecks into the European system. The third one is to enhance solidarity beyond the European Union with the eastern neighbors of the EU, particularly with Ukraine, Moldova, but also with all the countries in the vicinity of Russia, which are directly impacted by the cuts. And the fourth one is to further enhance market transparency and dialogue among the members and between energy producers and consumers. Of course, again, we're talking about a stress case. We may very well end up in a situation where we have, like we had this winter, mild temperatures, supply following up, and no major rebound on the demand side, which will lead to limited risk on the supply side. But let us not rule out the risk of a further tension on the supply side. So for that purpose, of course, the IEA, which gathers governments from around the world within its member countries and beyond its member countries, is working to further enhance that dialogue between producers and consumers to prepare and actively monitor in a risk management way what could be the different options to enhance further the stability and flexibility of energy security, and of course to also ensure consistency with the long-term energy transition objectives of the governments. Thank you very much for your attention, and I'm now looking forward to an opportunity to share with the Q&A. Thank you.
Thank you very much. Thank you, Jean-Baptiste. It's a pleasure having you here once again. We hope we won't have this stress test, no, in the near future. No? We'll see. Now we have the Q&A session here. Pablo have several questions, and the rest of the people you would like to send us the question, please go ahead with that. Pablo, the floor is yours.
Thank you, Arcadio. Thank you, Jean-Baptiste, for the presentation. We've got a couple of questions for you. They're asking you, what's the current situation of European storage as of today? And also, what's your opinion, or if the International Energy Agency has an opinion on the joint purchase mechanisms that is being developed in Europe?
Thanks a lot, Pablo. So on the first one, if I'm not mistaken, the current level of underground storage inventory in Europe aggregates is about 55%. So it's been declining. Of course, we started winter with 95%, and of course, storage has been used, but also some technical constraints to ensure the flexible cycling of working gas in the storage. So this has been declining, and the injection season is about to start. But we were, again, we started the winter with very strong levels, and the objective is with the minimum storage levels and the different milestones set up by the European Commission is to ensure that the next filling season will provide secure storage buffer for the system for next winter. As part of this toolkit of measures, you mentioned the joint procurement mechanism. Well, the IEA doesn't have a very specific opinion on the policy enacted by its member countries, but we strongly support mechanisms that further enhance security of supply and in a joint manner to ensure that countries are able to secure their supply, but also to avoid as much as possible competition among European countries for the same source of supply. So in that respect, an initiative such as the joint procurement mechanism will help further fluidify the process among the European buyers.
Thank you very much. There's a question about contracts. They ask you if the situation we've had this year has somehow changed the terms of new contracts have been signed this year. They ask you if we're still seeing 15-year contracts, if they're still being signed, or this has changed dramatically.
Well, so far, since broadly, since the beginning of 2021, what we have seen, one of the major drivers we've seen in contracting is the rise of China as a major buyer of new volumes. And this is, again, one of the key factors to bear in mind for the coming winter. What we have seen last year is that in spite of its high level of contracts, China did not consume up to its level of contract, so was able to resell some volumes on the market, which benefited to Europe, among others. But in case there is a rebound in Chinese consumption, those contracts will be there to procure the needed volumes for China. In terms of trends for the contract, we haven't seen strong changes so far. There have been talks, of course, in terms of switching more to oil-indexed mechanisms, because oil-index prices were throughout most of 2022 more competitive than spot index contracts. That's mainly for short-term procurement. The long-term procurement is still mainly indexed on oil. In terms of duration, the medium-term, short and medium-term contracts still very popular with end users, but they're mainly procured by the so-called portfolio players, the big companies who have bought the capacity from the export projects and are reselling those capacities. If you buy directly from the export project, especially if it's a new export project, there's a strong likelihood that the project owner will ask for much longer duration to cover its investment.
Okay, thanks very much. There are a couple of questions on low emission gases and the renewable gases and hydrogen, and what are the main highlights of the report? How they have behaved this past year, what is the forecast for next year? And they ask you like in places like in the US and in Europe.
Sure. Well, in both cases, we have seen a healthy growth and, of course, regain strong interest in renewable gases, whether it be biomethane or hydrogen, low carbon hydrogen, both in Europe and the US, which have been supported by policy schemes in Europe through the Repower EU package in the European Union, or the Inflation Reduction Act in the US. So that there is a very strong dynamic. The objective, of course, is to make sure that the capacity will scale up as soon as possible, also to ensure that the blending of those renewable gases into the grid will be made possible in the next few years in order to ensure the continuation of that growth. And of course, in terms of feedstock, when you talk about low carbon hydrogen, there's the linked issue of renewables and of increasing the scalability and the pace of permitting for new renewables to ensure that this capacity is available to provide feedstock electricity to produce hydrogen.
Okay. Concerning China and Russia, they asked you how are gas flows between these two countries and what is expected for this year, for 2023.
So China is buying gas from pipeline from Russia through the Paris-Siberia pipeline that was commissioned a couple of years ago, and it is still scaling up. It has not yet reached its full capacity, so it is expected to continue to scale up this year. And China is also buying LNG from Russia. There are plans to have a second pipeline connecting Russia to China. Those are likely to take time. On the one hand, China is not particularly eager to increase its reliance on a single source of supply, so it's likely to diversify its portfolio of suppliers. And also, of course, it takes time to build such a project. So even if such a project were to be decided this year, it will not come to full operations before the end of the decade, because you have to either to develop some specific exploration and production resources in the east of Siberia, or to connect the existing producing fields in the western Siberia, which were previously delivering to Europe, but then you have to cross the whole of Russia with pipelines to connect them to China.
Okay. There's another question. You mentioned that pipeline flows from Russia to Europe have declined 70%. And they ask you how have Russian LNG flows to Europe have behaved?
So yeah, the 70% is the situation currently compared to a year ago. If you look for the whole of 2022 compared to 21, it has halved more or less, because the decline was progressive. The LNG deliveries from Russia to Europe have actually increased in a marginal way, but they have increased. I think that we're talking from 14 BCM to 16 BCM in between 21 and 22. So the amount of Russian LNG being delivered to Europe has increased, but the market share of Russia as an LNG exported to Europe has shrunk, because Europe saw its LNG deliveries increased by more than 60 BCM. Out of it, only 2 BCM came from Russia.
Okay, thanks. Another question. They ask you if you see possible that during the summer of 2023, we will see high gas prices in gas hubs as we saw in 2022.
Well, this is one of the major uncertainties on the short run. I mentioned the stress case for winter in case Russian gas deliveries are stopped and we have a harsh winter. But of course, the situation for this summer can also have a certain number of uncertainties. And if you look at the weather we have seen since the beginning of the year, there has been a shortfall of rain. So there are some uncertainty on the deliverability of hydro for this summer, and French nuclear capacity is still experiencing some issues, so it's not likely to return as quickly as it was previously envisaged. So there's likely to be a potential for tensions on the power market coming from those two sources for the summer months.
Okay, thank you very much. That's it, Arcadio.
Thank you very much, Jean-Baptiste. A pleasure, as I said before, having you here. Thank you very much for this outstanding presentation. Good luck. Thank you very much. Buenos días a todos y continuaremos con esta saga de los informes de la agencia en el mundo del gas, que como ven ustedes, pues vamos a ver qué nos depara el tiempo futuro, ¿no? Good morning to everybody. It's a pleasure. Muchas gracias, Jean-Baptiste. Buenos días.
Thank you.
Thank you. Bye-bye.